Hey everybody, Dr. Tom Carr here, aka Dr. Stocks of drstocks.com. That's drstoxx.com. Want to introduce you to our primary site, drstocks.com, where we've been publishing 5 daily market letters since 2002. We also have a sister site now, drstockstrading.com, where we publish our 2 most profitable newsletters, the Hot Stocks letter and the Penny Stocks letter. And then there's Dr. Stock's Options letter, which is sold over on MarketFi. You can see we've had a wild roller coaster of a ride, but we're up over 1,500% over the past 3 years. And lastly, our service for long-term investors, the ichthysletter.com, IXTHYS letter.com. Okay, now what I'm going to do today is I'm going to introduce you to a trading system, and it's in fact the very first trading system that I developed way back in 1998 when I first started publishing some of my trading research. And it's been my bread and butter system ever since. Now, if you're a reader of my Trend Trading for a Living book or the Micro Trend Trading for Daily Income book, you'll be familiar with this trading system. It's undergone some tweaks since the publication of those books, and some good news, by the way, guys. McGraw-Hill has just asked me to come out with a new revised edition of Trend Trading for a Living. So that should be out by the end of 2018, around Christmas time for that. I'm going to talk today about the pullback system. And one of the things that you need to do, let me get to our charting package here, the TradingView, which I use as an online charting package. I use a variety of other things too, but this is kind of my go-to place where I keep watch lists and do some preliminary research on stocks. And what I've got here is a watch list of stocks that I have collected. You can see it's quite a long list, about 100 stocks altogether, maybe a bit more. And these are all stocks that I have selected based on a variety of different parameters, mostly fundamental, but also technical. Some of these are familiar household names for traders. Some are brand new IPOs, and we've got everything in between. Now, they all have reasonable liquidity. They all have strong earnings growth. They all have favorable charting patterns for traders, and on and on. So I've got this short list of stocks. Now, where did I get these stocks initially? Well, one of the ways you can get a list like this is by creating a screen in a service called FinViz. I have a whole series of videos in our YouTube channel that describes how to create a basic watch list scan using both technical and fundamental indicators. It's called How to Find the Best Stocks for Trading. It's a 4-part series. You'll find it on our channel. I would recommend that you go there. And I've got a pre-packaged screen that I sometimes use I call it the basic stock scan, to simply give me a preliminary short list of stocks that satisfy both technical and fundamental indicators. But we're not going to talk about that today. I'm going to show you another way you can collect stocks for your watch list, and that is by going to Investors Business Daily. I don't have any partnership with IBD, so I gain nothing if you sign up with them. But if you sign up for their online service, and I'm forgetting the name of the subscription, but it will give you access to a variety of stock lists, including their famous IBD 50 list, which will give you the top 50 stocks based on their technical and fundamental parameters. These are mostly big growth stocks that are showing strong relative strength. That's kind of the IBD niche, right? Stocks that have been in a strong uptrend for the past 6-8 months at least, and are showing strong growth in earnings. Now, some of these stocks don't yet have income. They're running on a hope and a prayer. But they are stocks that are up and coming, that are in top industries. They've got new products coming out, all the various things that you'll find in the CanSlim system that was made famous by William O'Neill in his book, How to Make Money Trading Stocks, Buying Stocks, How to Make Money in Stocks, I guess it's called. Anyway, I start here with the top 50, and I'll just throw all 50 of these into my watch list, and then I might add on a few more from, say, the IPO leaders, from the Can Slim Select, from the new highs and so on, sector leaders, relative strength at new high. There are a variety of already, you know, what are they called? Canned scans in IBD once you sign up for that service that you'll have access to. And, you know, they're all great lists as a great starting place for your stock screening process. Now, let's get back to the charts themselves and talk a little bit about our pullback system. Now, there are a variety of pieces to this pullback system. I'm not going to divulge them all here. I give you the bare bones essentials of that system in my Trend Trading for a Living book. You get the full version in an upcoming webinar that I'll be hosting in a couple of months' time, still putting all that together. You'll get a proprietary coded system of this in the Metastock Toolkit. It's called the Trend Trading Toolkit. It's something that Metastock and I put together years ago. And if you go to my site and email me, I will send you a discount code for that if you're interested in that. But that gives you 12 of my trading systems already prepackaged, and simply a click of the mouse will give you the best stocks for trading per all of those various systems. The pullback system we're talking about here is one of those. Basically, the pullback system in its bare bones essential form is A, you're looking for a stock in a sustainable uptrend. B, you're looking for a stock that has recently hit new highs. And C, you're looking for a stock that has pulled back a significant amount from those new highs, followed by your entry signal D, which is the stock is now starting to move back in the direction of the trend. Okay, you got that? Sustainable uptrend, new highs, pullback from the new highs, and resumption of the trend. Those are the four key parameters of the pullback system, and I have those all measured mechanically so that you can code them into a technical screening tool like the Metastock, like stockcharts.com has a nice version of that. FinViz, unfortunately, they do not have some of the technical indicators that you need, but you'll find other services out there, Ninja Trader and so on. But once you code those four parameters into your trading system and then you apply those to a watch list like this, which have already been screened for fundamental strength, you've got the best of both worlds. And this is just, as I said, it's my bread and butter go-to system. This is the system that I use to find trades for our trend trading letter, our cheap stocks letter. It works extremely well, and it works in all kinds of market conditions. Now, one little side note here, we've been in a market over the past several months that has gone pretty much straight up. Very low volatility. Almost every day we've been seeing those little tiny intraday dips get resolved to the upside, and it's just gone up and up and up, hitting new high, new high, new high, new high. We finally, last week, got a significant pullback. Over 2 weeks, we got a significant pullback. Let me show you the chart of the S&P 500 as represented by the ETF SPDR, SPY. And you can see it was a very sharp pullback. There was no news event necessarily that triggered this. It just was sort of too far, too fast. There was some concern about rates going up this year, 3 or 4 hikes because of strong job growth and peak employment and things like that. We have a new Fed chairman that might have rattled a few investors. So there were a few minor reasons for this to sell off, but it really was not, this kind of deep sell-off was not called for. So it was an excellent buying opportunity. And this dip down here to the 200 period moving average triggered a huge number of pullback setups. And if you had bought every single one of them, you would be up. You would be profitable today, 2 weeks later, in every single position. I mean, every stock that had that pullback dip is now trading significantly higher. That's a rare event, doesn't happen very often, but what I like is that now it seems like we're entering into a period where the market is going to be more volatile than it has been, and that's a very good thing for this particular system, the pullback system, because we want to see those dips that give us those low risk, nice entry points into these charts. Now, I'm just going to scan through. And a number of these charts have trend lines on them, and some of my scribbles and so on, simply because simply be, let me get this positioned a little bit better. I guess that right there is fine. Simply because these are charts that I'm always monitoring on a day-by-day basis, on an hour-by-hour basis, in fact. But let me show you a few highlights from this pullback system. One of the stocks that we have our traders in right now in the trend trade letter is HTHT. It's a Chinese group, kind of the Chinese Expedia, I guess. And right here it triggered this beautiful pullback entry. And let me put a marker on that. And right here, if you had bought that candle on the close, or if you weren't able to trade the close, you could trade a dip to the high, the intraday high of that day, which you got 2 days later, you would be in a nice entry place somewhere between 134 and 137, because even after yesterday's dip, it's trading a good 15, 18 points above that level on a $130 stock. That's a nice little return for 2 weeks. So that's what we're talking about with the pullback system. In general, what we're looking for in the pullback system is a sustainable uptrend. How do I know if it's sustainable? Well, there's a very simple test for that. You take a trend line and you mark the lower left-hand corner and you mark the upper right-hand corner of your chart. That's your 45-degree angle, and if that trend is more or less in line with that 45-degree angle, you have a sustainable uptrend. When it gets too sharp relative to that 45-degree angle, then we're looking at a trend that's no longer sustainable. It's one that I would avoid. So anyway, there's a nice looking pullback trade. You're going to see all of these stocks showing nice pullback trades. Just a couple of weeks ago, DQ is a semiconductor stock, and here's an interesting chart because while it had a nice pullback here, 2 weeks ago on the market dip, gave us a nice hammer candle, which would have been a nice entry point. The problem with this is that it's showing just a slightly higher set of lows relative to the last set of pivot lows, but it's not really at that 45-degree angle that we like to see. We want to see something close to 45-degree angles when we draw a line under the most recent pivot lows. So sustainable uptrend is an uptrend that in general follows a 45-degree angle. Doesn't have to be exact, but has to be close. But we also want to see that 45-degree angle, especially we want to see that in the most recent trading. And in an uptrend, you're always looking at the lows. You don't really care what's going on with the highs. You're looking at the lows, and that's a relatively flat. I mean, this stock right here could be setting up for a little head and shoulders, which would not be a lot of fun if you are a long-term investor in this stock. Here's your left shoulder, here's your head, and here's your potential right shoulder, and that would not be a very good place to go long. If you did take this trade on the long side, you want to be getting out about now. Let's look at a couple more charts. Pullback system, remember, a sustainable uptrend. Now this is not even in an uptrend, so this would not be a chart I'm interested in. This is a lot of sideways chunky movement with some big gaps, and that's not a fun chart to trade, so I'm not even looking at that one. FLT, unsustainable uptrend. Here's a good example of an unsustainable uptrend right there, right? From this low back here in September up to the highs in January is at a pace that would not be very sustainable, and we can prove that by showing our 45-degree angle, and you can see that uptrend, if we draw our trend line under the lows, is at a sharper angle than that. So not something I'm terribly interested in. TAL is not in an uptrend right now. It's in a sideways consolidation after a lot of choppy trade. Now here's a nice looking chart. This is Hilton Hotels in a sustainable uptrend, and come on now guys, help me out here. There we go. We've got a trend that is, above the 45-degree angle, down below the 45-degree angle, and whenever it drops below, it seeks to make its way back up. It's dropped back down again along with the sharp sell-off in the market. It rallied back up to the 45. It's now dropping back down again. It's staying right at the 50-day simple moving average. We have an oversold indicator reading here in the stochastics set at 533. And both of those are telling me that this is satisfied 3 of the 4 requirements for buying this chart. What it hasn't yet done is proven to me that it is moving back in the direction of the uptrend. So we'll wait on that for maybe a day or two and see what happens. Let's see if we can find one that we've traded recently or that we are in today. Stamp is one that we had our traders in a while back, but that's PAGS is an IPO that we have our traders in, having fun. And here's one that we have on in our personal account, Meritor, which is an auto parts maker. And we have, again, a nice sustainable 45-degree uptrend. And I've marked here the places where our pullback system would have triggered buy points. And you can see just about every one of those is showing a nice profit. This one depends on where you put your stop. You might not have made money on that one, but this sixth signal was definitely profitable. And it's setting up again, and on the pullback to the rising 50-day moving average, setting up again a nice new pullback system. Now our stochastics is not yet dipped down to 20, so it's not quite where we want to see it. And we don't yet have proof that we're moving back in the direction of the uptrend, but it is getting there. Okay, I'll wrap it up here. Just wanted to say again, that's the pullback system, those 4 pieces. You want to see a sustainable uptrend. You want to see a recent new high. And here's Meritor's showing right the recent new high on the earnings. You want to see a pullback, and then you want to see a resumption of trend. Now, all of the details of that system I'm going to be teaching in an upcoming webinar. If you're not yet on our mailing list, make sure you get over to drstox.com, drstoxx.com. Put yourself on our mailing list. We'll give you information on that when it becomes available. And we'll also give you a free weekly stock pick each week if you do that. Go over to drstoxtrading.com, drstoxxtrading.com. If you want to receive our free report on trading momentum stocks. You'll get a free copy of that, instant download once you sign up. And you'll also get notice of the webinar. Okay, I'm going to let you guys go. Market is about to open here, and I need to go. So God bless everybody. We'll see you soon. Bye.